Hello everybody, what's going on? Few important updates are coming from NIO. One of the major Wall Street player is shouting overweight from the rooftop for NIO. Forget the short-term noise. Morgan Stanley just reiterated its overweight rating and a $9 price target for this stock. I'm here to tell you why this confidence is absolutely justified. Let's start with the most recent news, new third quarter earnings. The headline grabber here is the dramatic improvement in gross margin. NIO's vehicle gross margin jumped to 14.7% in the third quarter, a significant improvement from the previous quarter. The overall gross margin hit a 3-year high at 13.9%. This wasn't luck, it was strategy. The improvement is driven by a better product mix thanks to high margin vehicles like the all new ES8 and crucially cost reduction initiative across the supply chain. Apart from this, their net loss also narrowed better than expected, a clear sign that NIO is finally getting its operational house in order, which is the foundational piece for any automaker. Morgan Stanley bullish stance isn't just about the third quarter numbers, it's about a clear actionable roadmap NIO has laid out for the next few years. This is where the real upside potential lies. First, gross margin target. Company is aiming for a 20% gross margin in 2026. This is a massive goal, but they plan to achieve it through continuous supply chain optimization and increased scale. Second thing, cost discipline. Management is tightening the reins, aiming to limit R&D spending to around RMB 2 billion per quarter and keep selling general and administrative SG&A expenses at just 10% of total revenue in 2026. This discipline is essential for reaching non-GAAP profitable break-even that year. Apart from that, Goldman Sachs has also raised their price target to $7 from $4.30, citing improved model competitiveness following recent launches. Recovery in profitability is great, but you need volume to make it massive. And NIO's product pipeline is what Goldman Sachs is counting on to drive that volume. NIO is expected to launch 3 new large SUVs in second and third quarter of 2026. The ES9, the ES7 and the Onvo L80. The new more family-oriented Onvo brand, which already has a hit with L90, will be crucial. Expanding its price range will allow NIO to tap in a much larger customer segment in China, significantly boosting delivery volume. With the current models already setting delivery records across its 3 brands, these new launches will provide momentum needed to hit sustained quarterly deliveries. Yes, the EV space is competitive. Yes, short-term headwind like a conservative fourth quarter delivery guidance can cause dips. But a true investor looks at the bigger picture. Morgan Stanley is standing firm on its $9 price target, which represents a significant upside from where the stock currently sits, because the underlying story is strong. Improving margins, aggressive cost control, and packed product roadmap that promises significant volume and a clear path to profitability by 2026. NIO is not just surviving the EV price war, it's strategically positioning itself for a major breakout. The turnaround is not a hope, it's a plan, and the execution is already visible in the last earning report. For those with a long term horizon, NIO remain a compelling high growth opportunity.